What's up, guys? Stas here. Welcome back to another video. So check it out. We have a lot to go over in this one. We're going to go over some setups that I'm looking at that I like. We're going to break down some numbers from a company that just reported earnings, and we're going to go over in general a bunch of charts, what I'm looking to do. You guys know the drill. So if y'all find value, hit the like button, make sure to subscribe, and don't forget to get up to 16 stocks for Moomoo, each up to $2,000, guys. Link down below, or simply go to stassurfest.com/Moomoo. We'll talk more about that later, guys. And with that being said, cheers. Let's dive right into the video. So it's currently about 9:45 a.m. when I'm making this video. So the market's just opened up about 15 minutes ago, and all the indexes as of now are in the red, except for the Russell. The Russell's up a little bit, about 0.25%. But other than that, we have the NASDAQ down 0.25%, the S&P's down 0.3%, and we have the Dow down about 0.1%, 0.2%, as the VIX is now up almost 2% on the day. Although I must say the VIX is still very oversold, if you will, in my opinion, or very low historically speaking. But that's, not what we're going to get into in this video. But either way, the VIX, even though it's low, historically, it is up on the day about 2%. And, maybe it will go higher if the markets do decide to sell off a bit more from here. I mean, as of now, we're barely in the red, but who knows, man? Maybe if SPY breaks under the wedge here, it could pick either direction. Let me actually set another alert here. Might as well at 440. Mark is at or below. I mean, if we start dumping under that point, that's where, we could get that VIX spike. Bears could start gaining an edge. But as of now, we're still in this wedge on SPY and on Triple Q. You guys can see, so we really have to, wait for direction, or at least that's what I'm doing. I'm not telling you guys what to do. As always, I'm not a financial advisor. Please, please, please do your own research. But yeah, as of now, we're only 15-20 minutes in, and again, we're in these wedges, right, on Triple Q and on SPY. So what do you guys think? Let me know your thoughts in the comments. And now let's talk about some setups that I'm looking at. Oracle, which is the company that just reported earnings. We might as well start off there, and we'll break down a bunch of charts, guys. Let's dive into it. Let's not waste any time. So Oracle stock right now, guys, are you ready for this? It is down almost 12%, down over $15 per share. It was just at 128 bucks. I think yesterday or the day before. Either way, now it's at $111. So percentage-wise, from 128 to 111, it is down 13%, right in that ballpark. It's under both the 50 and the 180 moving averages. And we can see here we're still technically holding trend overall. Keep that in mind on the 4-hour chart. Yes, we're still holding an uptrend here. But let's be honest, it's in free fall. It's, a falling knife, in other words, and we're not, at least I'm not going to rush into this until we see some sort of consolidation, and let's see the dust settle first. That's at least what I'm looking to do here after this big drop. So let me see what they ended up reporting, guys. Let me pop up the live news tab, and let me actually move my face a little bit here just in case you guys want to see these numbers as well. If you can even see them, they're freaking tiny here. I can barely see them, and they're right in front of my face here, guys. So it looks like they did EPS of $1.19, which beat the $1.15 expected. All right, that's good, but they missed on sales. Barely, let's be honest, barely, but they did miss on sales. $12.45 billion versus $12.46 billion expected. So they beat EPS, but they missed on sales. And let's see, non-GAAP operating income was $5.1 billion. GAAP operating income was $3.3 billion. Short-term deferred revenue, $11.1 billion. All right, operating margin was 26%. Non-GAAP operating margin was 41%. All right, let's see. Let's come up here a little bit more. I think I was reading that their hardware business was down year over year. I forget exactly. Cloud application revenue up 17%. Fusion, or maybe I'm wrong on that. Maybe that was a different company. Either way, guys, Oracle's numbers are out, and I'm not seeing anything that's, terrible. Maybe growth, sure, is slowing down a little bit. I have to double check that. But, the stock's taking a beating. It looks like here Oracle stock price target cut to 105 from 115 at D.A. Davidson. So maybe that could be probably not the sole reason, obviously. But, if a lot of analysts are cutting price targets, just like when the opposite happens, when they raise targets and stocks go up, when they cut targets, a lot of the time stocks could go down. So DA ended up changing their price target. Morgan, look at this, guys. They got downgraded to neutral at Monis Crespi Hard, which I've never heard of them. They got downgraded there. Melius Research adjusted their price target. They cut their price target. Citigroup adjusted their price target to 120 from 138. So a lot of price cuts are coming in, guys. So that's probably what's moving the stock down, 12%, as we're seeing right now. So again, like I said a minute ago, I'm looking at this not to just jump into it right now, but maybe as the dust settles, we start consolidating. If we hold the trend here, which as of now we are, but it's not guaranteed we will over the next couple of days. But let's say we do hold this, maybe we could be getting ready for some sort of relief rally. It's not guaranteed, of course, but that's kind of what I'm looking out for right now on Oracle. So that's Oracle. They just reported numbers. Another one that's breaking out, that's big tech, that I've covered a lot here on the channel, that I'm watching right now for an even further breakout, is Amazon, right? You guys probably saw me call this out a couple of videos ago when it was in this wedge, and now we're clearly breaking out. Yesterday we had a 3-4% green day. We took out the highs from the last couple of days. We've been above the moving averages, but now we're really starting to extend above them. We're taking the wedge out. So in my eyes, I think if we take out 143, which right now, we're wrestling with it. We're not breaking out quite yet. But if Amazon takes 143.44, mid 140s in general, right? If we break out of there, man, there's going to be a lot more upside, in my opinion, on Amazon. And let's see, all-time highs are a lot higher from where we are now. Although we could hit those at some point in the future, of course. It's totally possible. It's Amazon, for Pete's sake, but not in the short term. I'm not calling for that. But let's say from 144, could we start running towards, let's see, 3-year chart. Let me zoom in a little bit here. Could we start running towards the 150s, maybe 160s? Yeah, totally, guys, totally. I mean, look, back in March of 2022, Amazon peaked at 170, so we'd be trading in this window right here. You guys see this window? If I zoom in a little bit, we were trading between 145 to 170 back in January 2022, all throughout pretty much the beginning of April of 2022. So if we break back over 145, 150, we'll be back in that window, and that's where I think Amazon could be going to, again, towards the 170 mark, and we'll see where it goes from there, guys. Of course, baby steps. Let's not get too excited or too far ahead of ourselves at this point. And the last one that I want to break down, guys, which is about to break out, funny enough, funny how I said that, is XLE. This is up 1.5% right now, which is one that I've been calling out for a couple of videos now, or a couple of weeks now, and I've owned this for a couple of years, but I've just recently started buying more of it in the high 80s, mid-high 80s, and now we're starting to push the low 90s, right? Today, again, up 1.45%, and we have oil, I'm assuming, making a decent move today. Yep, look at that. Oil's pushing $90 a barrel. It is up 2% on the day, and I've been saying I think oil could see a run here. It's more of a contrarian play, not even, honestly. I mean, I don't know. What would you guys call it? But I think overall, if we get a sudden spike in inflation again, and maybe inflation is super sticky, which it is, like Powell's been saying, let's say it's stickier than we thought, maybe we start getting oil to come up to 100, 110, 120 bucks a barrel again, and there's a lot more that goes into it. Maybe I'll make a sole oil video talking about other fundamental factors, right? But let's say we start pushing 100 plus again. I'm telling you guys, XLE is getting ready for another move. It will be making another move at that point. And we can see here XLE on the 1-year chart. We have an ascending triangle, clear blue skies above 95, guys, at least in the short term. And on the 3-year chart, you can see that as well. And if I pop the max chart up, we can see XLE's all-time high, guys, is 101, 102, 101.52 to be exact. So that could be where we go next, from 95 to 102, 101. That could be a nice 7-8% move. Then if that were to break 101, all-time highs right around the corner, which honestly at this point I think is very possible. Now, does that mean you have to go and dive into this trade with me? Please don't do that. Don't do that unless you do your own research and you know what you're doing. But to me, more of a contrarian play, and I wouldn't even call this a trade. I mean, it's more of a midterm hold, honestly. Like I said, I guess I've held XLE for a couple years now. But it's in an interesting spot. We'll leave it at that. I'll make a video going deeper into what I'm doing, where I'm buying, thoughts. Maybe I'll do that. Let me know in the comments. But overall, as of now, look, I've held XLE, adding a little bit more to it. If we see a huge breakout to 120, I'm not opposed to selling out completely. But right now, I am just holding on because I think there's more upside. We'll leave it at that. Let me know your thoughts in the comments, guys. Hit that like button. Feel free to subscribe to this YouTube channel. It's free. And follow me on Twitter, which, guess what, is also free, at StockSurfS, or just type in Stocks Talk Stocks on Twitter. You'll find me. And before you click off the video, don't forget to get up to 16 stocks for Moomoo. Use that link down below, or simply go to StockSurfS.com/Moomoo. Once you open up your account and fund it with your initial $100 deposit, you get 5 stocks, each up to $2,000 right off the bat, and fund it with at least $1,000, you get 10 more stocks, totaling 15 stocks, and again, each of those could be valued up to $2,000, and fund it with at least $5,000 on top of those 15 stocks. Listen to this, guys. You also get a free share of either Tesla stock or Google stock, which makes this promo a no-brainer. So what the heck are you waiting for, guys? Use that link down below. And with that being said, folks, cheers. I'll catch you all in the next one.